Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look at the euro currency once again. So here's the time that when it's really very difficult to make any decision, at least on the euro currency, because if we'll take a look at the weekly and the monthly chart, there we have the same. So market stands in a tight range. Situation doesn't change for a few months already, as on a weekly chart, as on a daily, as on a monthly chart. And currently it seems that it comes from the too many data and too many driving factors that investors have to take into consideration before choosing the direction. And these factors are changing over time. So it's just impossible to absorb everything, and actually make the final decision on the direction. So definitely market needs some very strong and clear driving factor that could resolve this riddle and finally to push the market from the dead point. Correspondingly, if we take a look at the monthly and weekly chart, we do not have something really new. On the weekly chart, we were watching for grabber, possible bullish grabber, but unfortunately this week we haven't got it. So maybe since market still remains around the weekly MACD predictor, so maybe we will get it next week. Next week will be very interesting, so we will get the payrolls, Fed meeting, and other stuff. So maybe something will happen. But right now, situation stands so that we could just take a look only on the daily intraday charts. As you can see what's going on, it's two long-term consolidations last for approximately 2 weeks. So what you could trade in the current circumstances. That's why here I will share you with this just options that we have for position taking, and you could decide whether you like it or not. So would you like to trade it in this manner or not? Personally, guys, I prefer to get clear and transparent driving factors and the patterns. If I do not see it, I prefer to not take any position. So I usually do not place the position in the perspective. So that potentially might work, but I do not have, for example, any clear signs. So in this case, I wouldn't take the position. And for me, the current situation suggests that it would be better to wait. But still, all people are different. So you could have the different opinion on the current situation. And here, if you still would like to trade here, we suggest that there are only 3 possible trading setups that we have. The first one is actually based on the trend direction on the daily chart, which is bearish. And you could just trying to make the bet with the only clear patch that we have in place, these hand shorts. Actually, we have the same hand shorts on the dollar index. And on the 4 time frame chart, you could see it a bit more clear. So this we have a BCD. To the downside, OP is 107.40. This context is still valid. Yes, downside action very slow, not typical for the hand shorts, especially by looking at how it has started. It's very fast action. But still it is valid, as well as a bearish trend on the daily chart. That's why nominal context is a bearish. And with this recent downside breakout, despite that market stands in tight consolidation under the neckline, which is really not good for the hand shorters, but nominal context is still holds and it's not broken. And from that standpoint, you could think about taking a position with this pattern on some pullback or somewhere. This is first step. Second step mostly stands around this consolidation that we have on the 4 time frame chart and on the hourly chart. In fact, market stands in a widening triangle, as we have mentioned on Friday. Recent statistics that we've got hasn't clarified anything. So because as gross domestic product has just pushed euro currency down, the weak consumption expenditures index has returned right back up everything. So it appears in the same point where it was before the date release. Since the only thing that we have, which is clear, is consolidation itself. That's why The second setup that you could follow is just making a bet on the breakout of this consolidation in one or other direction. That's all. So if you suggest that market will go up, you need to try to take position as closer to the lower border of this consolidation as possible, just to minimize loss. Or you could use a stop buying order in the moment of the breakout of this consolidation somewhere above this area. So you, in general, could combine both of them because they are not contradictory to each other. And finally, the last one is the same story, but in opposite direction. If you would like and you suggest that consolidation will be broken down, you could try to take position as close to this upper border as possible, or use stop sell order below this area. So that's actually all the stops that we have. In general, if we take a look at the other markets, it seems that bears still have some advantage. So first of all, we have, if we take a look on the Great British Pound, we have the grabber. This is daily chart bearish grabber, suggests drop to the downside. On the dollar index, we do not have any problems with the hand and shoulders that we already were considering many times. So on a 10-year yield, that's actually we're also watching for. You could see that actually we see and have mostly bullish picture for the yields. The market stands on a tight consolidation here, which also can't call as bearish, and rising of the yields, potential increase and jump to the OP supports the dollar. So it seems that the bears have a bit more chances to success, but this advantage is very fragile. It's not dominating, so it's very low, small. So that's actually all that we have on the euro currency in general. So unfortunately, market stands in the position where we can't recognize the clear direction. We could follow only the trend that we have. If you would like to deal with the minor pattern that we have in place on the hourly chart, or do nothing, just wait for more clarity, which is potentially my choice. But as I said, any person is unique and have its own view on the current situation. So that's actually what we have on euro currency. Next week it will be lots of important statistics, and also it will be important to see what will happen on Monday, because on Monday United States Treasury should announce the plans for borrowing on first half of the 2024. It's very interesting will be to see the schedule of the maturing and what the strategy the Treasury intends to take in its borrowing program. So that's all I would like to say about the euro currency right now. Let's see what we'll get on next week.